Hi, my name is Iain McKenzie and I'm CEO of the Guild of Property Professionals. Today I'd like to give you the market update. So what have we seen in the first quarter? We've actually seen a bounce back from last year in the early stages. So with the certainty of the general election over and clarity over Brexit and the future, in the first few months we did see some very positive steps and growth in the marketplace. Particularly in London and the southwest, they were the fastest growing regions in the first quarter of this year. And the overall stat for the UK is actually a 2.1% price increase. Interestingly, the mortgage applications were actually up at 3.7% higher than previous time, quarter on quarter comparison. Then, of course, we had the lockdown on the 23rd of March, and that had an instantaneous impact on the housing market, as expected. We actually saw transactions in March drop by 9.8%, and that's completions that took place. Despite the fact that it was only a few days, it was 9.8% drop. And the real impact, of course, was felt in April, when there was about 50% less transactions that completed during that time. So, as expected, the housing market was locked down, and quite effectively so, for all of the right reasons. So what's happened since? Well, the market was brought back by the government in very early stages, one of the first sectors to be released from the lockdown because of the importance to the mindfulness of customers and the economy in general. And we've seen an instantaneous bounce back. Interestingly, on the first day back from lockdown, Rightmove saw 5.4 million people hit their site, which is a 4% increase on the same day of the previous year. And those figures and that new record has been broken even since then. We've seen a steady increase in the number of inquiries that have been coming through, and very good levels of activity. And the sales activity has been improving week on week as sentiment has improved. So there has very definitely been pent-up demand and pent-up frustrations of people that have wanted to move. And what we do know that is statistically, I think it was about 76% of customers in a recent survey by Jefferies analysts said that if they had plans to move pre-COVID-19, they will actually still try to complete those wishes and those dreams this year. So that's really positive for the housing market. So what's happened with pricing? So as I've said, pricing is up this year 2.1%, and that includes the lockdown period. But of course, there's a lot of speculation about what will happen in the remainder of 2020 for pricing. And it is actually far too early to give an accurate prediction. What we can only deal with and deliver you today is the data that we have in the early stages. And that data indicates that supply and demand is remaining remarkably robust, that the housing market is, as per usual, remaining remarkably robust. And it is expected that any sharp decline will be quite short, and we'll see a very steep return to the pre-COVID business levels that we had before. And there are already indicators that there's as many houses coming to the market today as there were this time last year, and the same with sales activity. RICS predict that there will be approximately a 2% growth over the next 5 years. And so bricks and mortar still, once again, appears to be quite a safe and robust mechanism and vehicle for you to invest your money into. From a rental perspective, slightly different trend. We saw a very steep drop in landlords putting rental properties onto the market. That was expected during lockdown. But we do have a very high demand from tenants looking to move. Inquiries are up for garden space and office space, as only 66% of apartments actually have outdoor space. And that's proven to be a very high source of inquiry level post-lockdown. One interesting fact moving forward is that 39% of tenancies are due to expire in the third quarter of this year. So what will happen with prices where that's concerned? Well, that remains to be seen. What we do know is that there's already been a 1.5% increase in the average rental price in the UK. So very interesting and busy third quarter is expected from a rentals perspective. Last point to make is that behaviour. What's happened during and post the COVID situation? Well, the property sector has probably leapt a decade in 12 weeks. Certainly in terms of technology. 98% of sellers and buyers would rather view properties virtually in the first instance and only go to see properties that are actually suitable for them physically and in real terms. So that's a huge importance, particularly in the rental sector. Garden space, as previously mentioned, is more important. Broadband, more important. Office space, more important. And particularly at the top end of the market, the upper quartile of the market, there are signs that people are at the early stages of thinking of moving out of the cities to more remote locations, but clear indicators of that is the broadband activity is quite important. What we do believe is that office space has a purpose and has a place very definitely in the work society. That's the feedback that we're getting from many, many sources. You and I like going to an office environment because it gives us a bit of flexibility. And of course, there's the social interaction. So we see a mix of home working and office working as probably the new normal moving forward. So the housing market, in summary, remarkably robust, has taken a dip, obviously, during the lockdown, but is bouncing back really nicely. If you want to move safely, always find a guild agent. We've got COVID-safe guidelines that will help you and your family and the community remain protected during this time. Let's keep that R rate down. And we're here to help. Please feel free to click on this report or any other report that the guild members have got. Thanks ever so much.